Well, let's get you updated on the markets. Along with help from Brian Hoops of Midwest Market Solutions, we had some overnight export sales announced by USDA, and it was right before the daytime session got underway. And it was a fairly sizable amount. Once again, 162,000 tons of soybeans that were sold to, once again, the unknown destination category. Current marketing year is the source on these. So that was thrown into the hopper. The market did not respond, though. Let's take a look at our corn, soybean, and wheat markets for you. On the last trades that we have from Chicago, we have December corn 2 1/4 higher now at 359.5 per bushel, and you have March up 2 1/4 at 371.5. So firmness in the corn market this morning. Soybean trade, not the case. They have been trading a little lower today, although they are now off of their earlier lows. November soybeans currently down 3 at 844 1/4. They had been as low as 838 1/4, so they have actually come off of that by about 6 cents now. January soybeans down 3 at 858 1/4. Meanwhile, looking at the wheat, in Chicago wheat, we have that December contract gaining 7 cents today. We're at 528 3/4. Kansas City wheat has been trading in a very similar fashion. We have December up 6 3/4 right now at 532. What about Minneapolis wheat? Let's check it out too. Here you have December now 4 3/4 higher at 587 1/4. Cotton trade on December, we have that December contract trading at 78.66 cents per pound, and that would be down 47 points. All right, let's join Brian Hoops of Midwest Market Solutions in Springfield, Missouri, where we're going to try and sort this all out. Positive news on the export front for soybeans, and yet they are the only one trading lower today. What's with that?
Well, I think the market's reacting to those new tariffs. This is kind of an escalation of the trade war. U.S. implemented 10% tariffs on over $200 billion worth of Chinese goods overnight, and China has retaliated with tariffs on $60 billion worth of U.S. goods. And that is what's weighing on the soybean market in here. Even though we had a private sale, that is providing a little underlying support. But just the fact that this trade war is escalating, there doesn't appear to be any agreement to be reached anytime soon on the horizon, and that's weighing on that soy complex.
Well, of course, the South American planting season is now well underway, and in some areas, I understand they're looking at maybe a record planted acreage this year in Brazil.
Yeah, I think that's something we're going to have a problem with this year. Is Brazil and Argentina have had a huge increase in exports because of China buying from them. And the fact that they have really sold out of a lot of their inventory, they are going to react to that by planting more soybean acres this fall for this winter when they begin to harvest. So it's going to be a big increase in acres. We already have huge amount of ending stock, so it's going to be very important to open up those export markets once again to China and to these other countries. And so we're going to have a problem, with a big oversupply, not only in the United States but also in the world, and that's going to limit any upside potential for the soybean complex.
Is the weather holding the corn market up today?
Absolutely. That's providing a little support to the soybean market as well. A lot of producers were knocked out of fields because of all the rains, and now we've got cool temperatures along with more forecasts for rains by later in the week. I think we're going to see a lot of support for the corn market because of producers not being able to combine, to harvest, and we should see basis levels start to appreciate as well.
And real quickly, Tim Ross has been talking about high temperatures late in the week, only being in the 50s in the northern parts of the Corn Belt, but I assume the crops are safe from an early frost, right?
Yeah, I think so. At this point in time, we should be pretty safe. There was some snow actually in Winnipeg over the weekend. That's not that far away from where our spring wheat producers have corn and soybeans. So they should be okay as far as maturity dates at this time of the year. Okay,
Brian, we'll come back in just a moment and we'll take a look at our livestock trade here on a Monday when we come back right after these messages. Wanted to point out a few things coming up this week on the livestock side, and they are significant. Today, for example, we have just come out of the cattle on feed report that came out Friday afternoon. Well, today we have another report coming out. It's going to be our USDA cold storage report, and that will be coming out, of course, at 3 p.m. Eastern time today, 2 p.m. Central time. Then later on this week, we're going to be getting our big quarterly hogs and pigs report. That'll come out on the 27th, which happens to be Thursday. Same thing, it'll come out in the afternoon at 3 p.m. Eastern time. And then we'll have a couple grain-related reports coming up at the end of the month on Friday, end of the trading month, that is. The quarterly grain stocks report and the small grain summary, they both come out during the trading session on Friday. That will be at noon Eastern Time and 11 o'clock Central Time. Now, today, not only do we have the cold storage report coming out, it is First Notice Day on October cotton. And on Thursday, it's going to be last trading day on these September feeder cattle futures. Is that going to have any impact here, Brian, on the trade?
Yeah, I don't think much in the way of impact. You know, the last trading day there for the feeders, I don't think will make much in the difference to the market at all. We're reacting today to the quarterly hog and pig the monthly cattle and feed report, that's what we're reacting to today. We're seeing some weakness in the feeder cattle. As a result, we're also looking at some steep losses in some of these live cattle contracts. Dollar plus losses now in December live, as we saw placement numbers well above what the trade had expected, and that is higher corn prices also weighing on the feeder cattle market.
Let's take a look at those live cattle futures then and see where they now stand. They did start out with a weaker tone this morning, and they're kind of adding to it a little bit. We have December live cattle currently down $1.07. We're trading at $117.38 per hundredweight after they did get up as high for a little bit as $118.22. They backed off of that right away. Now we're on the low of the day. February live cattle currently at $121.42. That would be down 83 cents. Let's check out our feeder cattle side of the equation. And here you have your October contract now down $1.30. We're trading at $156.78. That's only 2 ticks from our low of the day. And November feeders at $156.48 would be down $1.32. And if you look at the lean hog market, now they opened up firmer this morning, and we have the October 35 higher at 60.65 and December 22 higher at 57.62. So that one is kind of in the middle of the trading range here today. Your thought here, you talked about the cattle on feed report having bearish pressure here on the cattle futures. What about the lean hog trade with that report coming up?
We'll probably see some positioning as we get closer to that report. Maybe on Wednesday and Thursday morning, we'll see some positioning ahead of that report. Right now, we're still pricing in some cash trade that looks to be a little bit stronger this week. We've had a lot of death loss in North and South Carolina. We have to make up for that loss of slaughter somewhere, and so we're increasing cash bids around Midwest terminals, and that is giving us some strength in those front month October, December futures.
Okay, well, Brian, thanks for spelling that all out for us. I appreciate the time today. Brian Hoops, he's with Midwest Market Solutions in Springfield, Missouri, where Janet, he was telling me during the break, they kind